Welcome to the Risk Reversal Podcast. I am Dan Nathan. I'm with my good friend Dan Ives. He is the global head of tech research at Wedbush. Dan, welcome back to the podcast.
Great to be here. Always love coming here and look forward to it.
All right, you and I are going to have a punchy conversation. We always have punchy conversations, right? Does it have anything to do with my punchy shirt?
First of all, thanks for the Dan Ives clothing support. I really appreciate it.
Okay, where can people find this fit, Dan?
DanIvesClothing.com, and that's the collab that we do with Snow Milk, and
It's pretty dope. We have them for our whole team. Bill is sporting one. He looks great in that, so we're excited to have it. This is in honor of you. You know, I got a lot of stuff to talk about, and I'm going to play a little bit of an avatar here. You know what I mean? You're on the Twitter. You're prolific. You do a lot of TV. You know, by the way, when I talk about you sometimes, just kind of with like normies who are not staring at screens all day or whatever, like, yeah, I see him on CNN and everything like that. So we'll talk a little bit about like the arc of your media, like, because I think that's really interesting because it's not just CNBC. You're talking to the people out there. You know, we got your ETF. We talked about that. It's an AI innovation ETF. And it's gaining assets. You just joined as chairman of a crypto treasury company. We got to talk about that. And then obviously this. You put all those things together and people are like, hey, listen, are we getting toppy here? Dan Ives, huge AI celebrity here, talking about it every time he has the opportunity. You've been pretty bullish. You've been right. I don't mean pretty. You've been very. And, you know, you came on, I want to say, in mid-April. Yeah, and we had just gone, maybe early April.
That was
just
that,
gone
that
through
was
that
right.
thing.
Oh, that was
but you know, listen, you had a healthy dose of skepticism. All right, I just want to be clear. But you kind of turned tide fairly quickly on some of these names. You got bullish again. All right, so let's talk about this. People think, some people think that we're in this bubble phase. We all know that bubbles can go a long way or whatever. This one is different. That's what we keep hearing. You have some very sturdy views about why we're maybe just getting started here. Okay, so we're going to go through all that. We're going to talk about the Oracle. But let's start with launching an ETF at this point. It's on AI. You're accumulating assets. What do you say to the folks that this is a perfect example of a bubble? Because most people have never heard of a sell-side analyst, you know what I mean, creating an ETF. So let's talk about that one. That's a criticism. It's out there.
Of course.
Okay.
And actually, a lot of people, I think, like the whole, like the top, it was actually less about the ETF, it was more the clothing. Yeah. Like in terms of like.
Yeah, all right. So we'll throw the clothing. We're going to get to the clothing,
exactly.
Okay? Because I'm all in on the clothing.
But look, with ETF, my view, first of all, and it's all based on like our research, the Ives AI 30. No matter where I travel, no matter if it's institutional, retail, it's like, how do you play AI? How do you play it? What are the names? Where are the names? And my view is like, as the second, third, fourth derivatives play out into energy, into infrastructure, I wanted to have a list, a group that ultimately were the categories that I view as kind of AI winners, but it was also something that is dynamic, that I could change as some come in.
So how are things changing? Because the ETF's been around for
3 months.
3 months. You've gained, what, over 600 million?
Yeah.
Okay, which is pretty good in such a short period of time. How does it change? Like, for instance, Oracle now is your number one holding at 6.5%. I'm just looking here in FactSet, okay? And I'm assuming that has happened over the course of the last 48 hours as the thing has shot up in market cap.
Yeah, that was always top, that was always top there, but obviously from a market cap perspective, that went up. But the main thing is like this last quarter, like we just changed. Like let's say I view like CrowdStrike is becoming much more of an AI play because of what's happened in cybersecurity. So like we added them as a good example. Okay, we took out CyberArk because it got acquired by Palo Alto. Like there's other names where let's say GE Vernova, which I view much more of an energy play, like we took on, and I took off Adobe because I think Adobe, like we had hopes that they were going to try to be an AI play and monetize, but that hasn't happened. So my view is like in terms of the categories, it's keeping it dynamic to make sure that this is a list for investors that they could look at. And they also know, Dan, like they know it's like our research.
Does it start out as equal weight, like every name that goes in? And then
it's market cap driven in terms So that's why a lot of the bigger names tend to be a lot of the bigger weightings. And I think, look, the reception's obviously been very positive, but I think it's also because people know this is basically the way to play us and the research we do. Like, I mean, for anyone, and I think that's why it's been a.
Have you noticed that some of these ETFs that, there's folks like you or like me, I don't have an ETF and I'm not likely to have an ETF anytime soon, but that they're holding a lot of treasuries.
Yeah.
Have you noticed that? Like what?
I did.
So is that just because they don't have enough good ideas to put in their ETF?
Yeah, I mean, I've seen it. I find some of that like odd in terms of the treasury side. I mean, to me, it's
so you're
really,
taking a fee on treasuries that you're holding rather than picking stocks, right?
Yeah, and for me, it's like I just wanted. Like these are the names. Like these are the ones, and also it's categoric, right? It's like software, cybersecurity, chips, consumer, autonomous. And
so what do you make of though the fact is like, okay, we have the QQQ and all these names make up, let's say 60% of the, like what do people say to you? Like, wait, why do I own this? Because the way that you are going to manage the positioning, the way that you are going to move things up and down based on how you're viewing these companies, their products, their competition, their valuation, all the above.
That's okay. I couldn't have said it any better than what you just said.
Okay,
and
all
it's
right.
It's exactly.
Yeah, I want to bring it up because that obviously is going to be something that people are skeptical. And I know you've done your work, and I'm sure Wedbush has kind of vetted this very closely. Yeah. And again, like people can invest in whatever the heck they want. I'm seeing Open Door up 75% today. You know what I mean? There's a lot of goofy stuff going on in the market. I think an investment professional putting it out there, being very transparent. Here's my process. Here's the product. Here's what I charge for it. You know what? I mean, that's about as good as it gets in this market.
And the reality is, like, even like just coming off of Future Proof this week and seeing, so many like RIAs and thousands of people. The biggest thing like that I got feedback was like, this gives them the opportunity for their clients that really want AI exposure. Instead of just owning like these 4 or 5 names or maybe like single stock.
There's idiosyncratic risk. You're spreading it out. Exactly. It's thematic even within this one big theme.
Exactly. And I think that's why it's really been received well.
Right. And listen, I think of myself, I've been in the business since the late 90s. I still have scar tissue about the late 90s into the early 2000s. I think a lot of people forget what it was like to have a protracted bear market. We really haven't had one. When you think about, but think about the financial crisis. I mean, like we literally had 1 year the market was down. Think about, and then between that and COVID, I don't even think we had like a down year, down, that sort of thing. COVID was really quick. You would have thought that would have led to a bear market economic recession. We didn't have that. 2022, very orderly. And we bottomed at one point and then it was off to the races. So when I think about the ability for folks to basically look around and say, hey, listen, this could be a bubble, but I don't know if it bursts because these companies, you think of their monopolies, they think of their moats, you think of their base, their way to monetize these investments sometime. I'm very skeptical, okay? I think that what's going on here, and we'll talk about Oracle in a second, is not sustainable. And no matter how these insulated these companies are for these sorts of investments and how right they might be in 10 years, I think in the near term, it could be very dangerous.
And you understand like capacity issues too.
Yeah, okay. We'll talk about all that because I think that in and of itself is a long conversation. All right, so tell us what you're doing in a treasury company, just really quickly, and no one gives a shit what I have to say. Explain what's going on here and put, I think some of those criticisms, to bed.
Well, first, like with ACO and me being named chairman on Monday, first off, I never would have gone down this path just for a traditional token strategy. Right. This is not about taking a stock from X to Y. It's because as someone that's such a believer in tech and the AI revolution, I'm a believer that the future, you need true authentication, you need true human proof. And I think a gating factor is that when I think about the future in terms of bots, robotic, and ultimately proving human, Sam
Altman. All right, so explain it really quickly. Okay, so ACO is what?
So ACO is a company where now our focus is all on buying Worldcoin, which is the treasury vehicle, and that's the company that Sam Altman, along with his partners have built, which is based on the fundamental core of it. That coin is based on the Orbs, which are iris scanning technology. So far you have about 15 million that have signed up for it. And
these are enterprises that sign up for it? Individuals.
So individuals, about 15 million around the world have signed up for it. Just launched in the US a few months ago. And we believe this is going to at least 100 million over the next year. Mm-hmm. and will be the de facto authentication, human proof, I think vehicle over the coming years and over the decade.
So AICO though buys WorldCoin. They're out there.
We buy World. We're out there. We buy World, and we raised $250 million or $270 million
to buy it. Okay.
Because $20 million we got from Bitminer and Tom Lee. So we buy that, but it's based on what we believe the value of World is today. And the view that this network effect, that as it take hold, as you go from 50 million to 100 million, the transaction fee is more and more use cases in the apps, very similar like the early days of the PayPal model, as well as the true authentication of humans.
All right, can it be used for anything else other than this orb?
Well, the orb is how you ultimately scan your, but then once you have that data on the World app, that's where the use cases are going to come. Like right now, like the second biggest advertiser in Japan using it to get licenses.
It's kind of like Minority Report stuff. Is that what we're talking about?
It's fundamentally be like, is Dan Nathan? Is this a real? Is this a person or a bot? Because you think about advertisers today, that's a huge issue in this world. And what they've essentially built, it's not just from a privacy perspective where it's lockbox, but this scanning technology. Of course, people know Clear. When you think about the network effect on something like this, I mean, I ultimately view it's going to be billions.
All right, so why doesn't Clear have a coin? Why you don't need a token? You know what I mean? My point is like, okay, I pay Clear $100 a year, or actually American Express pays it for me. It's like a benefit that I have, when my card, that sort of thing. Clear takes the money, they build out the network, they pay their suppliers, they pay their service providers, all that sort of stuff. Why do you need a coin to operate this business?
Because the coin, from a crypto perspective, the technology ultimately is what makes it so safe. Like if you just think about how it's actually
immutable,
built,
blockchain, all that stuff. Okay.
And then, but this is very important. It's also the view that like this is going to be a network. This is going to be the value that ultimately is created as more and more platforms, more and more big tech
so
companies.
You can't speak for Tom Lee, and Tom's going to be on the podcast, I think, next month, and we'll go through this. And Tom is basically saying the same thing about his company, right?
Yeah, and as well as Bitminer bought 20 million.
Okay.
They were 20 million in addition.
So they're buying ETH because he believes that blockchain and what's built on it on the application layer is going to be something. I think he said that he thinks there could be a flippening at some point between ETH and
as World being one of the biggest use cases for ETH. Given it's built on ETH.
So
it's
an
all,
Ethereum
so view
blockchain.
it as like a cousin.
Yeah, but see, that's one of the things that I'm a little skeptical too. Is they got Bitminers doing this, and they have their strategy, and they're buying, WorldCoin. And listen, I don't know enough to be dangerous in this thing, but I'm like a skeptical being. This is going back to all the way, to 25 years ago, and so I just, again, it's one of those things that I have an inclination is going to be a hard thing in the not so distant future, but what do I know?
But just the one thing I'd say is that this is going to be something when it comes to the orbs that they're going to be commonplace. It's like over the coming years, you're going to go into stores, mall, stadium. You're going to see these orbs,
and they're happening right now.
They're happening right now. Okay. So it's like. And this is gonna we're just
so you scan your eyes on your own or however it's done, and then there's an advertiser, a retail, they buy the orb. Is that how it's gonna work? Yankee Stadium, like I can walk in there and Clear.
Eventually, the way it's gonna work is like you're gonna basically pay for authentication. So these orbs get deployed. That's how more people are gonna sign up.
Yeah,
and then ultimately whether it's an advertiser, an e-commerce platform.
Oh, but this is more online. I'm sorry. It's not real world sort of stuff. Are there real world applications?
There's going to be massive ones.
That's what I thought I read about when Sam Altman originally.
And that's why, like, without Sam, I don't do this because it's my view that they have built a solution that's basically, it can't be replicated.
Yeah, and probably what's going to happen if this is successful, OpenAI will buy it, but whatever, who knows? All right, well, let's move on from that. Lastly, before we get to the markets, what's going on with the gear here? Okay, so I'm a buyer, and all right. So here's another criticism: is like, why is Dan Ives? Why does he have this style? Do you know what I mean? It's very, there's still a lot of analysts out there who are still wearing the gecko shirts and the cufflinks and all that sort of stuff. You've made a choice here.
Yeah. And look, I mean, you've talked about, I mean, it goes back to my Long Island days in the 80s. You know, I grew up, I mean, but I've always gone to different style, right? And when it comes to like in this job, I mean, going back to like late 90s, like, look, it's slowly evolved my style here. But look, it's something like the way I dress, it's funky, it's different. But like, I always like, it makes me feel comfortable.
Yeah.
Makes me feel, but I've heard from so many people around the world over the years and be like, hey, could you ever produce, like, have you ever made something like, you know, colors, sure. So I'm like, and Snow Milk, which is an acclaimed designer in Brooklyn, and has unbelievable stuff. I wear a lot of their things, and they came to me. They've done some collabs with Djokovic, Whoopi Goldberg, some others. Like, hey, would you want to do a finance collab? And we started out, and it's been awesome because, like, you know, they gave me like some good design flexibility with the shirts. We started off with a men's and a women's shirt. And look, I didn't know how it would sell. I didn't know if only like basically like my buddies and like my family would buy it. So it's been like pretty like real successful. So now I think we're gonna probably go out and you know, maybe like hats and sweatshirts.
All right, listen, and I wanted to spend some time on that because you know that sort of stuff is out there.
Oh, yeah,
and what
totally.
I like, and this is why I think, you know, you and I are friends, and I respect you, and I respect the work that you do, and I get it. There's I get lots of criticism about, and I don't even dress funky or anything like that. You know what I mean? So I just wanted
but the shirt does look good.
I know it does look good. I just wanted to ask you these questions for anybody who are saying, hey, listen, why do we have Bubble Boy on there or whatever? And I'm like, listen, you know, I know you and your team are rigorous. I've met your guys. You know what I mean? I know the sort of work you do and stuff like that. But I just wanted to put it out there so people are like, why aren't you asking the hard questions? And you take the hard
questions. And I
question.
appreciate you also asking it because I know it's out there, so it's good also to address it.
Well, you know the shit that's out there about me.
Of course.
All right, so let's talk about the number one holding in the Ives ETF is Oracle. Okay, so Oracle's a company that you ever see this video of Larry Ellison, and we're going to put it in the show notes. It's from 2008. He's at like some industry conference, and Salesforce, you know, Mark Benioff, who used to work for him, had just come out with like some big proclamation about cloud. Okay, and do you ever see this video?
I was there,
and he's like, "What the hell is cloud?" He went on a rant.
So I was there when that happened.
Okay.
And
were you like I'm assuming that a lot of people were like, yeah, I believe Uncle Larry here. You know
at
what
the
I mean?
time, of course, because like, look, Ellison, for someone like me, you know, like, Oracle's one of the first companies I started covering, going back to like late 90s or all do that. So I always view like Ellison as like gold standard. I mean, there were others at the time, like, you know, when you think about in tech. So like Ellison was kind of gospel, right? And I think if you go to many of those years, like, they underestimated a lot of the transition. I think Salesforce, right? I think they were late actually when it came to AI, but then they quickly pivoted. I think Safra was so important there. And it's almost like Oracle now is what, like when you look at Benioff, it's kind of funny how it's the opposite. That's actually now they need to take a page out of their playbook.
All right, so let's just talk about what happened here. Okay, so Oracle on the infrastructure side, they're like literally low single digits % market share. Okay, so a lot of folks have been counting them out, and I've been skeptical because they're growing off a very low base, but there's been quarters in the last year where the growth is not something that you would expect right off that base. So then you get this Stargate thing, right? So it's Larry Ellison, Sam Altman, and it's Masa Son of SoftBank, and a lot of folks at that time were like, okay, everybody's trotting out this $500 billion number they're going to spend over the next 4 years. You know, they're going to the White House or Mar-a-Lago, and they're announcing it, that sort of thing. And, you know, I remember at the time, Elon Musk tweeted out the day of the Stargate, he's like, they don't have the money.
Yep.
Okay, he's like, show me the money, okay? And it doesn't exist right now. So when you look at Oracle's ability...
And ironically, Musk being best friends with Larry Ellison, too.
Correct.
Exactly.
Okay, so very interesting, right? So let's just play this out, okay? So Oracle guides for fiscal 27, okay, these purchase obligations of $455 billion. They say over the next 5 years, they're going to have $300 million in revenue from that. The stock goes up $250 billion. So if the stock goes up $250 billion on expected $300 billion in revenue over the next 5 years, and they have not built out the infrastructure, they don't have the balance sheet that all the hyperscalers do, so they're going to have to raise it through debt or, you know, this or whatever. And they have negative free cash flow right now, right?
Like,
So
again,
how does this work? Why is this stock rallied 40% in a day? And are people doing the math here?
well, I think me and you have talked about it a lot in the past, like the whole like cash flow, like, in terms of like CapEx and what these companies are doing, investors being like, look, I don't care about the next few quarters. It's about making sure on the other side you're going to have that growth. I think, well, first off, I think investors, just to begin with, have underestimated where Oracle sits in the stack and to what extent they're actually going to gain market share. So I do think investors overall underestimated how quickly this was actually going to play out. I think there's a view that from a capacity perspective, probably 75% of that, 80% they'll be able to get to. And again, I don't know if you get to all of it to fulfill it. But
all right. So I'm sorry to interrupt you, Dan. So this is all OpenAI. That's it. Like they don't really have any other customers. So like they are tied to the success
Heavily
of
tied,
OpenAI.
yeah.
Sam Altman is on the record for saying that he thinks a lot of the valuations in and around the space are getting a little frothy here. So you look at a name like Oracle, where it's all on the come and they haven't built it out and they don't have the money to build it out right now. Why would anybody be willing to kind of give them some premium right now to do all those things that don't exist? And it's very different for a Microsoft and for a Meta and for an Amazon and a Google. They've already spent $200-300 billion and they have all the market share.
No, it's faith that they're, first of all, I think also like a lot of, I can tell you at least like institutional, a lot of institutional investors that have like, they went skeptical, thought maybe like some of these things wouldn't happen. And I think they got proven wrong on NVIDIA, on Microsoft, on Palantir, a bunch of others. So I think there is a little, like, not just like FOMO, but afraid of like, I don't want to be
But if
on,
you're
on the
buying the stock up 40, who the hell's buying the stock yesterday?
I don't
40%?
think, again, I think some of that, no, I think some of that definitely probably got like extended relative to how much. I do think there's a view of like, look, if you have $2.5-3 trillion that's going to be spent in the AI build out, and the fact that they're so heavily tied to OpenAI, stock could pull back a bit. But if you're right, I mean, Oracle.
Okay, but how do you think they got that contract? It's not like they were a high bid for that thing. They were the low bid. You know what I mean? So like you're going to have this negative mix shift, right, on their business. On the margins, right? And I just think of this as saying like, I just don't think there's enough skepticism about this deal, which leads me to believe that, like, I look at the sentiment in this whole trade, and there is some rotation. I want to talk about the Mag 7 rotation. I just find the Oracle very curious, and I'm not going to ask you to make a bet on this. I bet anybody who wants to take for $100 bet that this stock is going to fill in that gap between now and the next 9 months.
Look, and I think you're not alone in some that would take that bet just because it had such a historic sort of run. The one thing I would say is that there is going to be so much pressure on them to now execute to make sure that number.
If they do a dilutive share sale right now, like as an analyst, like what would you think of that?
I think
if
that's
they go
already
and raise
expected. So I
like
think
$20 billion.
I think that's something that like most expect something like that. So it was like, because obviously debt financing or
not
some
a great
sort
time
of
to do that
secondary.
right now.
Yeah. So I think I think that's something that's probably expected.
Okay, all right, that's fine. I mean, I just wanted to get
And the
my
stock would
skepticism
obviously like sell off.
Yeah.
And then all of a sudden, like you could definitely see maybe this thing take on a life of its own in terms of after this type of move. But also, I just think they're just such a core winner in this trade. Investors that are playing it, it's like now I think as a percent, I think you're seeing more and more sell Adobe, sell software, sell Intel.
They act like dog shit. All infrastructure, like enterprise software, they trade horribly. All right, what do you make of this, though? If you look at a Palantir, if you look at even NVIDIA that did not make new highs, you would think that if this company is now like got a contract, you know what I mean, for hundreds of billions of dollars in a data center bill, why wasn't NVIDIA up 10% yesterday? I mean, Broadcom was,
sure.
But
I think also because of the view that like when you think about like Oracle is one where it wasn't factored in. I think a lot of that maybe on an NVIDIA after earnings, I think you continue to see sentiment a bit. just because they're related to China. It's
Well, they missed on their. I mean, they literally missed on data center, right? I mean, or they came in in line or something like that. And I really was in the camp that the day that they do that, the stock was going to be down 10, 15%. It didn't happen, which I think says to you that there's folks out there that want to continue to buy these stocks.
Well, it's also but also so much of it's related to the China trade.
Yeah,
because it all.
Well, you saw the headline today in the information. Yeah. Okay, so but Alibaba and Baidu, they're I mean, by necessity, but they're starting to use their own chips. Huawei is in there, and they're trying to compete. But these companies are still on the CUDA network. They're still buying these chips when they can.
Look, at the reality is that they're still lining up for NVIDIA chips, and everyone's basically now trying to figure out when you have some sort of better, target understanding from a timing in terms of Trump administration and what the restrictions look like, and ultimately what that next, call it a Blackwell restricted chip. And then what the White House, it's a pay-for-play model right now. That's essentially.
But there is an issue there that there's, the White House.
You mean the pay-for-play?
Yeah, they put this export tariff on it, but then all of a sudden the Chinese are like, wait a minute, you guys are bragging that these aren't even our second or third best technology, and so they're saying to their local, and they can have a lot of influence. Hey, listen, Trump's having the influence that normally a country like China has over their companies, you know what I mean? So you put those two forces together, and you could find yourself in, some sort of standoff that Jensen Huang does not want to be in.
He does not, because for him, it's he needs to play nice in the sandbox with Trump.
Both sides.
But he also needs to play nice in the sandbox in Beijing, given how.
Well, Elon's in the same spot, by the way.
Elon's,
you know what I mean? He's in a much worse spot.
He's in a much worse spot because of the relationship with Trump. And actually, I'd also add, relative to you need, from a regulatory perspective, a much easier regulatory path around autonomous. Mm-hmm. So that's something that you actually need Trump for.
All right, before we get to Google, I want to talk about the stalling, or if you want to call it some sort of rotation, right? So Microsoft, since its earnings is down about 8-9%, can't get out of its own way. Meta had its gap on its earnings. It actually filled in the gap, and it's not trading. Again, the NASDAQ just closed at an all-time high, the other day or yesterday. You're listening to this Friday morning. We're recording it Thursday afternoon. So Meta's kind of stuck in the mud. Amazon's stuck in the mud. Amazon actually never confirmed the highs in the NASDAQ, and I'm looking around here. So Tesla caught a bid today. It's up 5.5%. Again, rotation. Q3 deliveries, they're going to come out October 1st or 2nd. Consensus is for 430,000. That's expected to be down 9% year over year. Q1 was 335 deliveries. Q2 was 384. So you have that tax credit going away. Maybe you see a pull forward a little bit. So maybe that 430 is 450 or something like that. Is that something, as you think about this company, okay, and really this kind of second consecutive year of down units, you think about all the other stuff, price wars, China, brand degradation, all that sort of stuff. Competition too, by the way, is something. Yeah, well, in China, but over here, I mean, they're losing market share. I think it's 38% here in the U.S., and it always been above 50%, or maybe it's not as low as 38, but it's definitely below, 50 or something like that. So what do you do with a stock like that? Let's say they put up a number that looks like 460 or something like that. Is the stock off to the races?
Look, I mean, to me, the story is so much more about
robotaxi, optimist, AI.
Because if you and actually, look, I know many bearish on it. And actually, when I sit down with them, it's funny because
most institutional clients, more bearish than bullish, or no?
I'd say institutional are more bearish than bullish, but that's probably slightly changing because more are viewing it as be like, hey, maybe I just take a shot because it's been underperformer, and I take a shot on the autonomous optimist moonshot, and if I'm right, everything else, the deliveries, doesn't even matter.
All right, but all right, fine. I agree. I said this. I was at Robinhood at their summit yesterday down in over in Las Vegas. I can't even remember where it is. And I was on a red eye last night on my way home. Okay, so I'm a little tired.
That's pure Nathan dog.
Right. Well, you do your share. You were on a red eye this week.
I was on the red eye
from the Westgate. Yeah. So it was really interesting. There was, I think, 900 of their customers. I think there was probably 1,000 people in there, and these are they're all, really fervent traders, a lot of good investors, and I met with dozens of them. Like I'm sure you were just out at at Josh's thing, Future Proof, and you get to talk to a lot of these people. I love talking to these people.
I love it.
They're all smart. They give you really good feedback and everything like that. But these people, I was on a panel, and the guy who was moderating, my main man, Obi, he sets me up. All right, Dan, we're going to get to your favorite stock, Tesla. And before I even said a word, people are booing me. I probably had 100 people booing me. So the retail, they just know from the podcast.
Because everyone's like, money, Nathan the Bear.
Yeah, but they're booing me, which I think is amazing.
But first of all, but also that's to your credit too, where you've been consistent. And the one thing I'd also say is like, there's many people, they're like bearish, and then the thing starts to turn, and magically 3 weeks later, like, look, that's why we've been bullish.
Yeah.
So but also it's like people also like when they do that, they also like respect you because they listen to your opinion. No, they listen to your opinion. And
well, I try to just lead with what I believe is the data. Do you know what I'm saying? Sure. And then obviously I have a bias, but I said this thing yesterday, and it was. To me, I think it makes some sense about really what the bull-bear debate is. For the first time ever, the bulls and the bears agree that the EV business sucks.
That's
okay. So think about that, right? So then if you are a bull now, then you have to believe in exactly what you said, that robotaxi is going to scale and it's going to be profitable, and all the the what is Musk say per mile? What was there's some
interventions?
Yeah. So like there's a metric that how much you get per mile and all that sort of stuff. Okay. So you believe it's going to scale. It's going to be millions of cars on the road. Who owns them? The fleet, you know what I mean? It's that, I had the ARC Innovation, and I'm totally spacing on his name, and he's a really smart guy. He's their futurist.
Oh, yeah, I know.
And he told me that in a year, you might not be able to buy a 3 or Y because all the production is going to be going for the robotaxi. And I'm like, well, who's going to own them? Tesla's going to own it? You don't want to own those. Like, why would anyone want to own that? So is it like former Uber drivers that have their things, they put them in the fleet? Like, I don't know. How are you thinking about robotaxi?
So I'm thinking about it where, they're basically, Tesla is going to have a unit that is going to be very competitive with an Uber and a Lyft. I mean, it's going to be Tesla driven, just like Uber app. You're going to have a Tesla app. Mm-hmm. It's going to be the robotaxis that pick you up. Now, as part of that, and there's like over the next few years, if Dan or Jane or whatever has a Tesla, you could put your Tesla into that network.
Fleet, yeah.
But again, I think that's going to
be... It's going to drive itself from your garage, right?
Yeah.
So you're going to clean it, you're going to charge it, and then you're going to let some smelly fucking guy go in it, and that's going to come back to your garage, and then you're going to have to do it all again, like over and over again. No, it's the dumbest fucking thing I've ever heard of. I'm just telling you, you know what I mean? I'm just saying, like, what is going to drive through your fucking garage door? I'm sorry to drop all these F-bombs. It just seems so ridiculous to me. And you and I are going to be podcasting in 5 years, and we're going to go back to the tape, okay?
But again, I don't think that component is going to be the main one being they're going to be Teslas. It's like no different than like Uber, but these are all not going to have a driver.
Yeah. Okay. I mean, that's fine.
But you have to, no doubt, like you as a bull, if you don't believe in like physical AI, autonomous, robotics, optimists, then you're never...
Well, but I believe in that. It's all going to happen. And Brett Whitten was the name, and I didn't mean to be disrespectful about that. We had a great conversation. He's really good. He's a really smart guy, and we had a little back and forth like this, okay? Like, I believe that optimists will be a thing. I just don't think that you should be paying the multiple you are for Tesla right now, because I'm going to take the over when Optimus scales. I'm going to take the over when it becomes a profitable business or there's use cases for it, right? That's fine. Throw them in factories, fire a bunch of people, see how well that works. We are going to be in a sci-fi world. We all agree. Like almost everything in sci-fi movies that you and I have been watching for the last 50 years, like you remember Get Smart or whatever? I got it on my wrist right now. You know what I mean? So like I get it's all going to be there, but it doesn't mean that you have to underwrite a stock that is going to be your sci-fi play.
Till they prove it.
Right.
Exactly.
But look he proved the EV thing. Now the EV business sucks. So the robotics thing, don't you think that robots is going to be a really competitive business in 10 years?
But I also view that the EV business ultimately created the platform to now where the autonomous business could take off.
Okay. All right. So tomorrow morning, let's say we walk in and there's a headline. Elon Musk tweets that, they put in a $200 billion bid for X and XAI. Okay.
Well,
what do you feel about that?
Oh, that would be the best thing.
Would it though? They're losing $1 billion a month.
But no doubt. I mean, from a burn perspective, but you want to have Tesla. Look, it goes back. Part of why the stock's up is like, the board did the right thing, regardless if people disagree. It's like, with the $1 trillion package, you need to keep him. He's your best asset. He's not leaving. He's more like wartime CEO now.
Right.
Like, which we talked about. Like, politics is definitely much more to the side now. After obviously the experiment gone banned.
Does he not? I'm not on Twitter, but does he not tweet like political stuff anymore?
Not
like,
really.
Yeah. I listen. This is just pure conjecture. I bet you the Secret Service came to him after, like he said that, when you go full Epstein on the president and everything like that, and there's a lot of crazies out there. We don't have to talk about this literally sickening, maddening thing about political violence in this country. You know what I mean? Like, it'll be, I think there's risk to that. There's some like Pizzagate people out there about that sort of thing. And so,
as well as also people with like a very big, when you have a big audience, you could say something you don't need.
Correct.
But then obviously.
Well, I'm just saying, like, if he could turn the brand degradation thing around, if he could come and be that Tony Stark guy again that we all knew and loved, you know what I mean? Like that's a good place to be.
He has, whether it was like board, overture, however you want to think about it, he has definitely shifted. Now,
in a matter of months, you mean?
In a matter of months.
Yeah.
I mean, now the thing for him, he obviously now has to focus on. You need new vehicles. Right. You need a wartime CEO, and ultimately, like the only way you get to that, Do you
think he can restoke market share, like gain back some market share in the U.S. if he finally comes out with that $25,000 car? And
the other problem is that you haven't had any new models.
Yeah.
Right. The other ones are basically like, they're tweaked here and there, but essentially nothing's really new. I think you could gain back some share. But there's no doubt, like, you've lost whatever that percent is, like 5%, 10%. I mean, you have lost like a subset of the population over the last year because of some of his politics.
What do you think? What do you make of when you see these delivery numbers and it's like literally 5% or 7% of the deliveries are the X and the Model S? Does that matter to you or no? Like, so these are the higher end.
Because the reality is, like, those are almost like, not like sunset models, but like they're models that you don't want to see. Like, if I said to you, like, where do you want to see like good numbers? You want to see it a Y and 3. Mm-hmm. Look, to some extent, the models, they've been disasters in terms of the actual numbers, right?
Well, first of all, they're really shitty cars. I mean, the 3 and the Y, like I get them all the time with Uber, and I delete them most of the times. I don't want to go on those
But
things.
from a delivery perspective,
yeah, it's the whole game.
They've been very, very soft numbers. And now it comes down to, like, it's a very, very important time for Tesla over the next 6-9 to prove out the vision.
All right, but it doesn't seem like investors care, right? If they came in and
they don't care about delivery.
If they came in at 410,000, like the stock would go down 5%,
and then it
get
comes
bought up again. But it is important to recognize the fact that we have an S&P and a Nasdaq, that are all-time highs, and Tesla trading at 366. And by the way, it's up 5.5% today.
But it's significantly underperformed the rest.
It's trading exactly where it was. You ready for this? In I want to say March of 2021. I mean, it's trading at the same spot. So it's been a massive underperformer. And so I think the market is actually taking my side of this, believe it or not. You know what I mean? But you got to believe in robotaxi. You got to believe in Optimus. And what I would say, based on his history about delivering product, you got to take the over, But listen, all of these companies that have multi-trillion-dollar market, this is only $1 trillion, some of them are going to be $10 trillion market cap companies in 5-7 years, and some are going to go the way of Adobe.
Yep.
Right? Is that fair?
Look, I mean, it's a cautionary tale, because as we see with Benioff, we see with Adobe, AI, think about how quickly it's changing things. Ironically, like, Google probably loses the DOJ suit if it's not for AI.
Right.
AI ultimately, in a
Because
twilight.
the judge sees that as a risk to their core business, and breaking it up would put them at a disadvantage.
So it's like it just shows in this world.
Okay, so were you as bullish when that news came out and the stock's trading up a few percent or something like that? Are you like, this is going much higher?
Oh, we were like, I mean, we've been like a whatever, like table pounder on Google, because it was my view. First, it was our view, and we talked about it many times. Like, I thought Barker's gonna be worse than Byte in terms of the breakup. My view is like, no matter what, Google and Apple are still gonna figure out how to get 20 billion, given that sort of, they both rely on each other so much. And it's just like, you know what it is, Dan? It's like, in covering tech my whole career, so many times there have been like these silver bullet, like Epic, Apple, or Microsoft, DOJ, going back to late 90s. Everyone's like, this is it, it's over. And it's just like, I have always played, like a lot of times you always say, like, I'll play like, your term, like, I'll play like the other side.
Yeah.
So I'll always take the other side on the like lawsuit that's going to take away like, it's almost like I'll always play the other side.
Yeah, but I'm surprised. I'm in your camp, and I think you've been right to kind of downplay any sort of regulatory action against these.
And also,
names.
her being gone from the FTC is also very important, even though FTC is not necessarily like the most pro tech, but I do think it's very important with her being gone too.
Yeah, no doubt. I mean, she was not particularly well liked, and I think a lot of these tech CEOs have kind of played the administration, like a fiddle. There's no doubt about that. But I didn't think there was a lot priced in for the fact. Like, to me, like maybe there was like a 15% probability that the remedy was going to be that they have to break up the company. So I was just surprised.
You mean surprised at just like the move?
Yeah.
I actually think. See, I wasn't surprised. I was actually surprised at the initial move not being that much because my view is like institutional. I'm talking about institutional. This has been so under-owned, however you want to think about it, like new, in terms of like equal weight or whatever. And then I think the view is now it's like, whoa, by this happen, this unleashes them to now be like super aggressive when it comes to their strategy.
Yeah, I would think of like between Amazon, Meta, and Microsoft. Let's just say we had a period like, February to the lows in April. All those stocks all sold off about 35%, right? Mm-hmm. At this point, if they sell up 35%, they're probably above, their February highs. I mean, not really, but you get my point. Mm-hmm. Google is probably the one that I would buy. And it's not just based on valuation. It's that Gemini, and you know a lot more about this than I do, it's getting better and better, right? And I think that's it.
And you also bet Apple is going to double down that part now that the DOJ thing is done.
Right. But what if they actually end up getting more from Google? It doesn't. You're saying it wouldn't be a big deal if they're paying them $25 billion or something.
No, like because if it's $30 billion, because now it's like Apple has no choice. They need Google.
Yeah.
It's not going to happen internally. And then Google needs Apple. So now they finally
for distribution. Yeah, I mean, and the Google thing also is that, how many of their platforms have over 2 billion, monthly active users, and there's a handful that have 1 billion. And
also there's such that narrative too that like search is done because of AI. I think that was like a huge, even though they proved it on the quarter.
Right.
And there's like that narrative.
Out of those 4 names, let's say we get a 35% pullback, across the board. That would mean like a 25, like basically like a 2022, real sustained sort of sell off. And Nvidia and Tesla and Netflix and Meta, they sold off 70%. I just don't know why people don't think that couldn't happen again. If there's like some sort of downturn, if there's some sort of hiccup as far as just too much spend, not enough ROI, all that sort of stuff. These stocks could easily go down that much, right? I mean, look, not 70, but like, 35, 40, 50.
Look, I think you could always have pull, and you probably will, like, depending on Fed or whatever, have some like fall pullback here and there. But I do think a lot of it comes down, just forgetting like stocks for a second, it's like if the use cases continue to play out and the spending is there, even if CapEx obviously moderates in 20, of course it's decelerate, but here's the other thing, like sovereigns are now just starting to participate.
Right.
and you have the rest of the world coming through.
All right. So actually, I might have said something that some listeners are going to think it was kind of stupid. So 2022, there was no real secular sort of theme as it relates to technology.
No, because
now
really
there is.
AI theme really started
Late 22 with
late
ChatGPT.
20.
Yeah.
Exactly.
So what I said might be stupid because here we're in a secular, like theme, okay, and it's going to find its way into other parts of the markets, other parts of the economy, and thus the markets. So therefore, there will be some support on a downturn. You know what I mean? Because these companies are not Yahoo and Qualcomm and Nortel and Lucent. These are companies that still have monopolies. They still have these massive moats, great managements, balance sheets, that sort of thing. So, but all that stuff was true in April, and they sold off 35% from those highs.
I think it's a different sentiment versus April. And also April, because obviously like the tariff-driven issues and some of the things there. I also think it's like when you look at the numbers we just got from Microsoft, Meta, Oracle off quarter, and then NVIDIA when you start to factor like what a China number could be. When you put that together, that's where you're like, whoa.
Okay, but so Microsoft, great numbers. Azure really outperforming every growth-wise on the clouds there. Gapped up 8% to a new all-time high.
Yep.
Closed on the low that day and had barely seen an uptick.
I know.
Help me understand that. You talked to a lot of obviously institutional investors. Like, what was the mindset there?
I think the mindset there was at a peak moment. Like, you talk about Oracle like being a peak.
Yeah.
Like, did they get too far over their skis with the guidance on Azure? Like, in other words,
so you think it was a bit aggressive, the guidance, or no?
I don't think so, but I think
that was an investor perception. All right, what about Palantir? Same thing. I mean, had a big gap. It's kind of filled in that gap.
And Palantir is another one. Like, it's like so controversial relative to just the valuation.
Mm-hmm.
I think that's one where it's like, when you kind of read through the tea leaves for Oracle and for the hyperscalers, that's huge robustness for Palantir. It just keeps coming down to like, what do they have to do to keep the stock up? And look, my view is that as more enterprises go down the path and you see more and more of this CapEx build out, as well as on the government side, I mean, Palantir, I still think this is a company going from $3 billion in free cash flow to probably what's going to be $8 to $10 billion next few years. Now you could argue like that's still expensive, but that's why I just think there's a name you can't just look at over the next year. You got to look at the next 3-5 years.
All right. So I keep hearing sovereign AI.
Yeah,
when that means, government spending. We just had
especially
that.
Middle East.
Yeah. Okay. So Saudi Arabia, the president goes out there, UAE. Explain to me.
Can I say one thing there too? Is like also like Middle East has a very good understanding that any China issues, those are chips that they can get. So they're very aggressively going after this dynamic that we're in where like, hey, as long as there's tension between U.S. China, that those NVIDIA chips, those Blackwell chips, we want them.
Right, but isn't there, what was that ruling that was put in place by the Biden administration, and I'm totally spacing on it, that there was a handful of companies or a whole list of companies that couldn't buy the chips because they know they're going to find their way into China or at least data centers.
And a lot
China
of that
controls.
stuff has actually been...
Yeah.
Kind of behind the scenes.
But there's a huge gray market for these chips.
Of course.
So they're finding their way into
and a lot
China.
of it goes through
and not even the H20s, like the H 100 or 1000.
And a lot of that stuff all goes through Singapore, Vietnam, in terms of the back.
And you know that you spend time in Asia and stuff like that.
Exactly.
Okay, so then why is Jensen like whining because they're selling these chips? I mean, what percentage of the chips that they're selling are actually finding their way into China? And maybe the number's not $15 billion a year because it's already being accounted for somewhere else.
Because Jensen knows that like he doesn't want Huawei to get. That's the big issue. It's less about the numbers. Like he doesn't want Huawei to get that business because that will create a moat for Huawei within China.
But at some point, it's going to be that way because, if you think about what a digital Belt and Road is going to look like, right? And the Chinese are going to get most of the developed world, most of these countries that take their money, that take their loans, that are building the infrastructure based on China's prerogatives, that sort of thing, outside of China, obviously, they're going to be flush with Huawei, data centers that are, have Chinese servers and Huawei chips in them. You know what I mean? So like it's happening. And I know the big argument is like, well, why wouldn't we want China, you know what I mean, to be dependent on our technology? But I don't know. I don't know why that's in their best interest as a, you know what I mean, as a country.
But also NVIDIA is that's still gonna be such a huge business for NVIDIA.
Right, but the Chinese, they make all those authenticators and all these things that go into our drones. I mean, we're so dependent on for so many things. We need to find leverage when it comes to our technology, and that is our leverage.
Look, the biggest chip on the poker table is NVIDIA chips for administration. You could argue like whatever, like planes or whatever, but it's really those chips.
Yeah. All right. Well, that makes sense. I mean, I get your view on that. Let's talk about Apple. They had this release on Tuesday, I think. I don't think anyone, analysts or whatever, had any expectations about the hardware. I mean, I'm going to get one of the Airs just because I've had every iPhone, and part of it is if I wasn't such a nerd and didn't podcast and wasn't on, Fast Money, I'd probably not get them. I stopped a few years ago getting the Pros because I don't really see too much of a differentiation other than $500 in the price. The Air is interesting. It's the first really new form factor, right? We had the Mini that did not do well. This thing might not do well. I mean, in a month from now, we might be hearing how this battery lasts like 4 hours. You know what I mean?
No, it's but look, I mean, there's some design changes on a scale of 1 to 10. It's probably an 8.5 in overall product cycle.
Just this phone, nothing else.
But just overall in the Pro.
Yeah.
I mean, some price increases. I think numbers are conservative. But look, the reality is, the reason the stock sold off, the reason Apple's an underperformer. I mean, you've talked about it a bunch of times, but it's like you're 2 letters, AI. I mean, you are that is
2 letters, meaning why the stock has been underperformed. Yeah.
Because guess what? How about this? If they let's say they beat iPhone numbers by 10% for next year. Let's say right now I told you, Dan, they're gonna beat iPhone. I'm a crystal ball. They're gonna beat iPhone numbers by 10% next year. If
they've had 2 consecutive declines year over year.
So what you say,
is that what they've had so far?
So what you say, I give you the Goldilocks scenario. And you're like, oh my God, that's great. Stock's going to be up huge. Guess what? If you don't have a Gemini deal, you don't have a true AI strategy, you know what the stock does? On those numbers, it actually underperformed.
All right, so let's talk about that, because to me, services, I think, was up 13% year over year. Is that right? And services make up like what, 25% of their sales, and then obviously the mix shift is great for for the company. What do they have? Margins are like 45% or something like that. I'll just check really quickly on my facts. At 47%. Okay, and they've been going up.
Margins are double hardware.
So, but a lot of that has to do like services, X that Google payment. They're just not that interesting.
But that's how it always.
I know, but like for instance, that's the whole thing. People were talking about this upgrade super cycle for the actual hardware, as it relates to Apple Intelligence. This is, going back to June 24. I was saying that's a late 25 thing. I had no idea they were going to push everything out. Now it's actually a late 2026 thing. We're going to, right now, this is going to be, they're going to try to showcase a lot of this stuff at WWDC, but to your point, unless they have Gemini, or unless they have OpenAI's technology, and it's got to be on the phone to some degree, don't you think so? It's not going to be a big upgrade cycle.
But I do think something happens between now and WWDC. Like that's my view. I mean, you can't just...
Right, they're going to have to do something.
They have to.
Yeah, but do you think, let's just say they announced some like really broad deals, an extension of their Safari search deal, and they're going to do this, that, and the other thing, and it's going to be cloud-based, and that's why we have these new chips in the phones and everything like that. Do you think that's going to be a big deal? Because I have ChatGPT.
No,
I have it right here on my phone.
They need to lay out something where you're like, whoa.
Is it just a vision they have to lay out, or do they have to actually ship product?
They have to lay out the strategy with timetable.
All right, do you give a shit about a foldable phone?
No.
I mean, let's get gimmick,
foldables have been disaster. You know how many people got fired from Samsung because of the foldable phone? I mean,
I love it.
Yeah.
Yeah. Okay. So Apple. All right. So did we go by your thing? If they say they're going to do 10% better units, what would you impute the acceleration if you have a 10% acceleration in units? What does that mean for services?
That would be probably incremental 14-15% growth for services.
Okay. And then what are you thinking about when they finally have a good AI product, when you get to like the services level? Is that the unlock?
That's the unlock.
Yeah.
Right. But it goes back to like, it's like it's like having like a kid that plays baseball and they do well. There's some kids that they're BP legends, right? They're legends in batting practice, legends in the cage, right? Then all of a sudden, deer in the headlights, 0 for 3, strikeout looking, get in the car. You're like, where was? So it just comes down to, like, for Apple, it's like you got to show it.
Yeah. All right. I want to hit a couple other names, and I promise you we'll get out of here. What do you make of it? I'm just looking at my screens right now. Netflix and Spotify are both down 3%. Okay. Netflix and Spotify have been in the recommendation business. They've been in the machine learning, recommendation business, that sort of thing. Both stocks have not performed particularly well over the last couple months. They're down probably 10-ish%, maybe high single digits. I know this is taking you back. It's not, like these are not the sexy AI sort of names. What do you make of these things? Are they being underappreciated as it relates to their ability to kind of get, productivity benefits within the companies, but also their ability to serve clients?
Yeah, I do. And I think also, like, by not being viewed as quote unquote AI plays, there's less sort of upside sexiness to the story.
Right. But wouldn't you think that AI would be one of these things? Like Netflix margins, I think, are like 15 points over that of Spotify. And I would have to think there's some use cases that would be really great for these companies.
But these are things on the come that they have to ultimately introduce.
All right. What do you want to leave our viewer with here?
I would just leave with, like, look, it's like just tune the noise out. Focus on what the data points are showing you. Have names on the screen, names on your whiteboard. If you feel like you missed them, when the sell-offs happen, have those names and wait for those opportunities. If you don't want to buy some of these before, fine. But it's like, just be ready, because, like, I just tell you, like, the theme and the thesis is playing out. I'd probably say something like better than even expected.
Yeah.
But don't get caught up in the, like, bubble. Because when you look at it, it's actually the opposite of what's happening from a fundamental perspective. And then just pick your spots, pick your names.
All right. What do you make of all these things, like the MIT report and this Census Bureau report? Like all this stuff about, like, uptake of the products.
I mean, I just view it like, look, like 3.5 million air miles the last 25 years. Like, I do my own work. And bottom line is, like, my work tells me the opposite of that. That's why I'm not saying that there aren't those things, but that's why I just rely on the work that we do. Which gives me more and more confidence rather than some of that stuff.
All right. Do you have any holds on some of these big names in your coverage?
And I mean, the only ones that we have a hold on now is Uber because of our view of the robotaxi.
Okay. And
but we used to be bullish.
Have you ever had a sell on a stock?
I think I've had one sell in 25 years.
Really? All right. So is it considered a sell when you go from a buy to a hold? Do some investors
like
think
a
that?
sell rate? Maybe I've had 2 sells in 25 years.
Okay. And you own it. I mean, you're like, that's me. I'm Dan Ives.
I know.
Like,
yeah, exactly. It's so that's just like, look, that's the way. It's the way, like, sort of.
All right, but you and I have talked about this too. I mean, I think you're on CNBC a lot. You obviously do like the CNN. The CNN, you're talking to the people. The people who are watching CNBC are probably
that's a different
more
audience too. Like in that,
totally. And so I guess the point I would make is, like, it's like Atticus Finch. She said, before you really know somebody, you got to walk a mile in their shoes. I used to be really cynical about sell side analysts. Not. When I was when I say cynical, I mean, let me say that again. At one point in my career, I might have been a little bit more cynical, so focused. And this is when I probably was not so, really into the fundamentals of companies, understanding what they do, who they compete, what their products are, like how profitable they are, what cycles look like, all that sort of stuff.
Yeah.
And, to me, an analyst and their rating and their price target and, like that meant something more to me. Over the last whatever years, especially doing like the media, there's a lot of nuance in it. You know what I'm saying? And like a lot of these buy-siders, they're talking to Dan Ives, but they're talking to like 10 other people. And for 100%. Them, it's just a good way to kind of gauge sentiment about the sell-side community. So listen, you're always really transparent. You always take all the questions, and I really appreciate that. I'm happy for you with these new endeavors. The Treasury thing, I'm very skeptical about, okay? But you're telling me you have used cases. You're telling me you have Sam Altman. okay, I mean, if you're going to be in AI, you might as well, hitch your wagon to Sam Altman.
Totally. And it's just, and look, and like I get it, but it's like bottom line is like anything I do, whether it's the ETF, whether it's clothing, whether it's ACO, whether it's obviously it's my job as an analyst, it's like I just do it with like passion and kind of like transparency.
Yeah. Well, that's why you got to do it. All right, Dan Ives, we appreciate you
so
being
much.
transparent on the Risk Reversal
And
podcast.
thanks for the shirts.
Okay, man. It's our fit here from here on out. All right, thanks, Dan.
Thanks.